All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, January 31st, 2022. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So markets today, up just under 1% here, spiders there. You see 87 basis points with a pretty good little rally today. Same thing with the Qs. Up just under 1%, and the Dow up 0.5%. The Russell, big winner on the day here. That is up 1.93% currently. So a nice move here ahead of the Fed. And what we kind of talked about yesterday, what did I say? I think we probably go down here, touch this lower trend line, and then we get a bounce off of that. And possibly one more pop up into this, the upper trend line. So that would take you right into that 410 area, maybe even possible another nominal high. Now, obviously, what would the catalyst be? Of course, the FOMC, right? So everybody's waiting on that tomorrow. And we're getting a light volume float here. Take a look at the volume on the SPY with about 40 minutes to go in the trading day, just 42 million shares. So it's a nice rally, but this is not what I would call big money buying. Again, it's just retail and algos here, and yeah, you're giving a bid here, and you know we'll leave it at that. Right now, we're holding this kind of lower rising wedge trend line, and I would say logically we're probably going to get up here. Right now, I think this bear market is probably suckering in as many bulls as possible, and that's really, you know, essentially the end of it. We've been talking about this for a while. We'd have a bear market rally in January. We've got it. We're rolling into February, into the greatest risk period for stocks historically, February, March. So we're trading up ahead of an FOMC. You never like to see that. We're trading up into the two highest risk months. That to me says that we're probably going to come back down. So you guys know that thesis there. There's nothing really too new to add to it. I mean, we've had you know, a nice bid off that trend line, and that's really the target here. Maybe we can hold up into Thursday. There's a chance we could bid up Wednesday, hold the gains, and then maybe reverse on Thursday. But I don't have. I think timing wise, we're at about the end of the run here. So again, market's holding up. Tomorrow will be the big kind of kicker, though. We do have Meta reporting after the bell tomorrow too. That's going to be like, you know, that's going to be like a gnat compared to the FOMC. And then, of course, Apple, Amazon, and Google on Thursday afternoon after the bell will be the big ones. So as far as which way they're going to go, it's hard to say. I mean, you know, I can't pretend to know what a stock's going to do into earnings. Apple's holding up reasonably well, though. Google, you know, that was under a little bit of pressure the other day, but it's just recovered nicely. You have kind of a bull flag there. Again, but this can be completely negated with a bad quarter. I mean, there's and they can have a good quarter and the market could react negatively, or vice versa. So that's always the case there. Meta here, up into the 200 moving average. This one I think is probably out of the ones that are reporting. And you can see Amazon there. I think this Meta is the least one I'd want to be long if I had to take a pick out of those. And that's simply because, you know, you're at from 88 to 148 since October, and even just, you know, since the end of the year, we're, you know, 120 to almost 150. And it's overbought. It hasn't really had any sort of pullback here. It had a nice consolidation base, I'll give it that. But it's into the 200 moving average, so it's already pulled forward. You see the weekly there. You're going into a major breakdown area, basically back testing that with the 50-week moving average just ahead. So, I mean, Meta to me, you know, if it wasn't for earnings, I would favor a short here. Or maybe if it gets a pop on earnings, you know, 160, you know, big gap fill right there. That's where I would look to be short if and when it gets up there. But either way, I generally don't play ahead of earnings anyway, but just wanted to cover those really quickly. The triple Qs here, again, holding up well, up 1% here with the, you know, so they are still leading the spiders. So, you know, it's a good indicator here in the short term, as is the Russell. You're seeing a little bit of risk appetite come into the market, and it's paired a lot of the losses from yesterday. It did close back below that 200 moving average yesterday, though, which is a little bit of a sign of weakness. I mean, you want to see it back test the 200 and then, you know, rebound the same day. You don't really want to see it close below it. Either way, Qs are hanging in there. Could they get up to 300? I can't rule that out. In fact, 300 would probably coincide with this ES level here, this rising wedge. 4100 appears to 4100 on the spiders. It's basically 408, 410. So you can't rule that out. Those would be the levels I'd be looking for there on the triple Qs. As far as the Russell, that is making new highs here, but you're going up into this red bar, and again, we kind of have a rising wedge starting to build up here. So this is getting pretty tight up here. We could, a lot of the time when you get a rising wedge or a falling wedge, you get kind of a fake break and then it kind of reverses. Really good case in point here, Tesla. So we had kind of this like falling wedge look. We had a breakdown and then it reversed, right? So something to watch here. Nothing really too new to update though. I mean, we've pretty much everything today is worked out kind of how we thought it would yesterday, as far as that spider's bouncing there at that low. Anyways, the Dow, let's keep an eye on this too. You almost have kind of like a wedge here. And again, I told you guys 345, been saying that for probably a week or two now. It can still get up there, and nice little trend line here, a little symmetrical wedge on the Dow. And again, a pop would get you up there, so that would probably coincide with your 410 level and your 300 level there on the Qs and SPY, respectively. So just something to keep on radar there. We can probably get rid of this level now. That's been violated too many times. But yeah, Dow holding up along with everything else. Anyways, semiconductors via the SMH. Again, up 65 basis points today. Nothing terrible here. Again, you just have a nice inside green bar there. One pop gets you up to that 245, 248 level, which is, again, where I've kind of give you guys that target out last couple of weeks. We're consolidating beneath that, so it does look like it wants to go higher here. So we'll give it the benefit of the doubt for now, as long as this pattern holds up. If you lose this green bar, then it's a different story, and we're probably going to go down and fill that gap very quickly, and then you'll have some support around that 205 handle, but that would be problematic for SMH. I will say NVIDIA, this might have already topped. This does look pretty top heavy, and this is a big semiconductor, obviously. That is not a good looking candle yesterday. The gap down and then closing below yesterday's low, or I should say Friday's low. So NVIDIA may be under pressure. I'm just bringing this one up because it's a big semiconductor, and a lot of you guys follow it. So just something to keep on your radar there. IGV, again, holding up well. So we got above that reversal bar high, above the 200, and this is just consolidating here sideways. So again, maybe this can get up to that gap window, gap fill around 290. I don't see it getting too much past that, but it's holding up for now. So we'll respect cloud software. It's behaving well. In the meantime, Dow Transports, nice surge today. So big pop here, up 2.7%. But again, the lower highs there, not something you want to see with the market making higher highs. So that is a divergence, and it's a bearish one. I'm not going to reiterate it a million times. I know you guys have, I've beaten the drum a billion times, but maybe this is technically bullish consolidation. So again, if we do get a bid off the FOMC, like I was suggesting, your level is still that 15,000 handle, which was essentially what we were looking for before. It never quite got there back in November. So did some backing and filling. Maybe it can get up there afterward and satisfy that upside target. But for now, it's hanging in there. And again, I just really don't like those lower highs there, as you guys know. Anyways, over to interest rates here. Let's look at the long bond first. Let's pull up ZB here. So bonds kind of all over the map here. I still have a buy signal on this. Yeah, it's holding up well. Obviously, the FOMC would be a catalyst if it were to get a bid. If not, and you lose this green bar, then yields are going to go a lot higher, rather. I almost said lower, but they will go a lot higher. And the 10-year, like I said yesterday, that has already lost that green bar low. And the 2-year has as well, and this will be problematic. We want to see this trend line, the market bulls, you want to see this trend line hold up. If this breaks, that's going to be a huge problem, huge problem for the market moving forward, because that means the Fed has got more work to do. But for now, it's hanging in there. It's still safe, so we'll give it the upside bias for now. XHB, this is a blow-off top move, so already overbought, extended, and now up into this trend line here. This has hit my upside objectives, and this is definitely a short at this point. Full disclosure, I am short XHB, just so you guys are aware. But yeah, this is about done here. All my upside objectives on all the home builders have been hit. Same thing with ITB. So these are overbought, extended, way overdone. I think today's candle is a classic blow off move, up 4%, which is a big move for home builders anyway. And then look at the volume here. So do you think that this is institutional money buying this with this candle, or do you think it's retail and algorithms? Right. So institutions were buying here, right? Or perhaps short covering here. Look at the volume. Look at the volume in the October lows. Right, look at the volume here. It's very heavy, very heavy, very heavy. Now what do you have? Increasing price, decreasing volume. Look at the 50 moving average on the volume trends. It's declining. So don't ignore that stuff. Pay attention to it. VNQ holding up as well. Again, this is going to behave with the home builders. It's hanging in there. It's stalled at that 200 moving average. I don't see it getting much higher here. Could it get to 92? Sure. But that's about it for what I have penciled in right now. Excuse me, XLF. Again, we're kind of watching this little rising wedge here. A lot of rising wedges out there, if you haven't noticed. But yeah, it's basically banging on that top side trend line. Like the IWM, like I was saying, we could get a possible like pop and then kind of a fake, like a fake out. I do have the XLF potentially getting up to 37. That's really the max move right now, though. Just so you guys are aware, those are my levels on it. But yeah, it's holding up okay. Again, rising wedge. You usually get a bid up through that first and it ends up being a fake out. So we'll be on watch for that next week, or possibly later this week, even XPD holding up as well. This might even get to 495 at this point. Or 493, that's your pivot high there. You're consolidating a little micro bull flag there. So I was going to say I can't go a little bit higher, but I like these setups here on the sell side when you get a pivot high and then a red bar right above it. So just be aware of XPD here and the financials in general. I think they're all are getting very long in the tooth. KRE as well. This is going up into a lot of resistance here. These regionals and the large banks, KBE, a lot of resistance up here at 49, and on KRE. A lot of resistance coming into play at 62. So just watch for those. But again, if the market gets a bid, these will all get a bid, at least in the near term. Anyways, crude. Interesting little rally here for crude. Crude is up 1.45% right now. And we talked about this yesterday. I said, look, if we can put in higher lows, then you've got a chance at taking out this red bar high. Now we haven't done it yet. We could take this low out tomorrow for all we know, but it's hanging in there for right now. I had a nice reversal. I like that daily chart candle. That is constructive, and we hit that blue trend line one more time. I know we kind of violated it a lot going through this, but it looks like that level still does mean something a little bit when you see the market kind of go right there and then get a bounce off of it. So who knows? Maybe it holds up for here for now, but until it takes out this high on a weekly close, I still have a neutral to bear bias on crude, as you guys are aware. XLE just continues to hold up here, a little 50 MA test. You back tested this previous resistance as support, so it's holding up well. Again, I can't be a buyer up here. Same thing with XOP, and same thing with the OIH, although, you know what, it's holding up well, so I can't really say anything bad about it. Nat gas, this is interesting to me here. So this has been kind of all over the map today. I'm up 1.12% currently, and lots of volume coming in here at the lows. Historically, too, if you look at seasonal trends, nat gas typically bottoms around February, and then it trades up really into June, July. I think this is trying to put in a bottom here. As you guys are aware, lots of support down here. There's also talk about a massive cold front going through the northeast. I generally don't really care about the weather that much because it really just affects short-term trends. This has been a much more mild winter than typical for, at least the Northeast in general. So some of that definitely has to do with it. Inventory kind of increasing. I think it's more than that. I think a government is involved in this, but and I suspect that somebody wanted to take delivery below $3 for whatever reason. But it does look like it's trying to carve out a bottom. Take a look at the intraday volatility. When you see a lot of volatility, big swings like that at a low or at an extreme high, usually that's the sign that a top or a bottom is coming. But I like this candle here, like this formation here, oversold, oversold, oversold. You're starting to see some tails come in here. So that does suggest that buyers are stepping up here in the upper 270s, 275, 280 area. So we'll see if this can get going. I'm thinking we're going to get a zigzag. So maybe up to 350 or 350 to $4, and then kind of like an ABC up. I think this will backtest $5 at some point, maybe not in the next month or so, but at some point in the medium term, I would say. But nat gas, this is a very interesting trade here, and I think once this thing clears and makes a set of higher highs, the shorts are going to get really pounded, and that's when you're going to see a move like this here. So, and just for instance, not to spend too much time on nat gas here, but this move in December was 530 to $7, and it wasn't even oversold then. So just think about how oversold it is now. If we look at a yearly or a 2-year chart, that is like all time epically oversold. So just to give you an idea of the upside potential there. Anyways, dollar index here, holding up again, just chopping sideways here. Looks like everybody's waiting on the Fed. I've got sell signals on really every currency except the dollar. So or anyone that's at the yen, the Aussie dollar, the euro. These are all sells. So obviously you guys know I like the dollar here. And again, we're holding that tail candle. This should get going in the month of February. Anyways, gold here. No actual sell signal on it yet, but this is so long in the tooth here. Again, I can't rule out a pop maybe to 1975, 1980, somewhere in that area, that red bar. It's holding up really well. Commodities always tend to overshoot. Again, like I said, just seen that gas. But hey, it's hanging in there. This is way overdone, though. I think this does need to go back down to 1820, 1830, and it probably will, I would say, sooner rather than later here. But for right now, it's hanging in there, so we'll give it the benefit of the doubt. Same thing with silver. You guys know the story there. This needs to do more backing and filling, but it's holding up okay for now. And then platinum here. Nice tail candle there on platinum. So it did find some support around 1,000. I still think it probably wants to go test 1975 though. But for right now, it's hanging in there okay. And copper, bounced off that 20 moving average. We'll see. I think I'm expecting kind of a lower high around 425, 430. You had a nice topping tail there. Usually you get a retrace after that. But again, you guys know $3.95 to $4 is my level on copper. And then lastly, Bitcoin. Not really doing a whole lot today, just kind of a nothing burger. Good reversal yesterday. Again, they pumped it up over the weekend. You always want to be careful of that when you see that over the weekend. Low liquidity, no institutional buyers on Sunday, trust me. And then nice engulfing reversal yesterday. It's getting a little bit of a bounce here, but nothing really too major. Not really anything noteworthy. It's still not a terrible pattern here. I would prefer it to not be making higher highs like that and higher lows, because it's not really like a true bull flag in that case. But again, if the market bids, this can get up to 25,000. Nothing's changed, bottom line. All right. Back over to the spiders here. It's 3:38 p.m. Let's see what we're doing. We had a little bit of profit taking a few minutes ago. And look at that, market's right back up here. Again, this does seem, this to me, by the way here, look at the VIX. So VIXy, higher lows with higher highs on the spiders. So we'll watch out for that. And again, the actual VIX, has a double bottom. And this is not a pattern of strength, though, by the way, just so I'm not saying it is, but you have a double bottom on the VIX and higher highs on the spiders. So just be aware of that. But to me, anytime you trade up, we have an uncontested rally ahead of a volatility event, I'm always going to favor the sell side there. And plus, we're starting to get very extended on a lot of assets, a lot of equities going into earnings season as well. And we're getting close to resistance on the charts. So we'll be waiting here patiently for the FOMC tomorrow, as is everybody. Anyways, I'm going to wrap it up here, guys. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.